And we spoke about and another one, and this is literally after Jess said oil, when we started talking about gas. I literally said, look at the ETF XLE, and we spoke about the two top allocations inside there. And since Monday, that ETF has gone up by $7. And if you study the history of that ETF, for it to have a $7 move is really drastic. It doesn't move like that, right? So this was just like another play that had you just apply that information.
Yeah,
know the rest.
I mean, she definitely dropped some good gems in that episode. You should watch that episode again. The traders market, and there's opportunities in every crisis, and the oil situation. It's unfortunate if you're trying to get gasoline right now. But right. if you're trading oils and futures, and you made some money. I think it's how much? 130 a barrel, something like that.
It got up to that. I think when it closed, I saw that like at 118.
Yeah. So 118. It's interesting. It's interesting, but people are definitely looking for alternative ways to invest their money. I
think while the European markets were open, obviously the oil that's coming from Russia, a lot of it goes through Europe. So when the European markets were open, it got up to like 140 a barrel, and then by the time the New York Stock Exchange had opened, I got down to like 120, and then I sold around 118. So.
And the bear market and the stock market, I mean, depending on how you look at it, we're already in a bear market. I mean, I know the NASDAQ, I'm not sure the percentage, but if it's
21%.
Yeah, so the NASDAQ is already in a bear market because 20% from a high is the bear market.
Mm-hmm.
So NASDAQ is already in a bear market. And
I think the S&P the S&P might be 13%, or the Dow. They're both double digits.
They're headed in that direction. So when you talk about a recession, goes hand in hand with a bear market and the stock market. And this has kind of been my fear for a long time. I've been talking about this for over 2 years, that at some point in time, we're going to have a real bear market in the stock market, which is another reason why I wasn't really overly enthusiastic about over leveraging on option plays, which I've been very vocal about as well. Because when a bear market comes, and like the last bear market that we had during Corona was the shortest bear market in American history, it only lasted a couple of weeks, and that's not normal. And that was only because they put so much money into the economy, and it's only so long that you can put so much money into the economy. Then We're seeing the effects of that now with all-time high inflation.
Mm-hmm.
So now when they start tapering the money that they're printing, now you see the effects of that. And now that it's got to stand on its own. And then you couple that with a crazy war that just popped out. Now we're in it could potentially be a real bear market. And there's opportunities in bear markets, but there's also opportunities to lose a lot of money in bear markets as well. So I started my career, a lot of people don't never actually lived through a bear market because they wasn't investing at that point in time. But when I was a financial advisor, I came in 2007. So I came in at the worst bear market that we've had in over probably 80 years. And that's when I started my financial planning career. So I understand when people's 401ks went from $1 million to 400,000. Like, that's real.
They're about to retire in a year.
Yeah. Yeah. So, a lot of times, like, we just kind of we talk about these things, but you got to understand that this is real life. And, a lot of times, people's life savings is on the line. So you got to be extremely, careful, cautious, and knowledgeable because, the last bear market, people just forget. People have short-term memories, but a lot of people committed suicide. That happens. So, it's just important just to keep that in mind. Like, bad things happen during recessions. So everybody like champion, I wouldn't necessarily go around like just, parading that you're happy for a recession or you're happy for a bear market. Of course, there's opportunities, but you got to keep in mind that, bad things happen during these times. And a lot of people mentally break down, lose everything, lose their lives. So just keep that in mind from a humanitarian standpoint.
Yeah.
Divorce rates go up, domestic violence, child abuse.
Yeah.
So please, check on people as the economy gets worse, please.
Please. Okay. So let's go into another topic if we can. Okay. So
go into the one you want to go into.
No. I'm gonna go into this. What did you see that made you say the storm was coming in October?
A couple of things. So when a good site that you guys can look at is macrotrends.net and Guru Focus. So I'm always looking to see what are the governments buying, what are the companies buying and hedge funds buying. I saw when we started to top out that a lot of investors with big capital stopped putting their money to work. So, and once we get past a certain point, I knew we were going to taper back, but once I didn't see certain people putting in a lot of money, and notice when the market was raging, everyone was coming on Market Mondays, CNBC, shout out to everybody there. And then I noticed maybe in October, November, everyone got really, really quiet. And I started making some calls and texting. I'm like, hey, what's going on? Like, nothing, normal market. I'm like, nah, I feel that there's something up. And then when Bezos started to let off some of his positions and some top CEOs began to sell off, I'm like, that's usually a sign. I told you guys, whenever you start to see about 25 to 30 companies break those all-time highs and executives start to take those golden parachutes, that's a sign that they know that something is wrong. They can't tell everyone at one time that, hey, things are going to fall apart. So once I saw those things in tandem with everything hitting an all-time high, and I've said it from the beginning of the show, once quantitative easing stopped, we're going to go back to a real market. And once they began to taper, we got into a real market. So we're just now seeing what the market actually should be if they were not printing all of that money. So number one, always look at the yield curve. Number two, always look and see what the cycle of quantitative easing or printing of money from the Fed is. And then third, go look to see what the top 5 hedge funds are doing. That'll give you all the clues that you need to know if you should be buying or selling.
Yeah, I felt like we saw these things. We saw these signs and we alerted everybody to these signs.
We did.
And it was just kind of just like, yeah, it's just a sign. It's just a sign. We'll keep going. So yeah, I mean, I remember when we were talking like, yo, Elon sold some Tesla stock. Yeah, Bezos sold off some Tesla. Like, yo, like everybody's taking stock or selling stock in the company. It's like, yeah, these are signs.
One thing that you can learn from nature. I gave the earthquake, I gave the fire forest reference before, but if it's 105 degrees, what is a good chance of happening?
Rain.
Exactly. Rain. You got to cool it off. So whenever anything gets to a point where it's just too hot, you should expect rain. And, you see stocks at all-time highs. You see everything flying at all-time highs. At some point, it's going to get too hot. And rain is necessary. It has to cool off the environment. It just can't be 105 degrees every single day. It's just not conducive. Plants can't grow in that type of environment. So we learn a lot from nature, and then you can apply it to just, common sense. So you kind of could see this coming if you had, any indication of that, what comes up must come down, and it's a natural cool off. So.
Yeah. And the more volatility we have, I always told you guys, that's why you want steady, consistent gains opposed to like really explosive. And I know everyone wants to flip and get the bag real quick, but if you don't know when to take it out, the downside, for those of you that made 40,000, some of you turned around and then lost 80. So that's why I'm always big on every trade, have to know your target long-term. A couple of you asked me, hey, should I have stop losses on my long-term? If you're in a position where you can withstand it, no, because the longer you want to hold equity positions in a company is much better. I don't recommend it unless, let's say you have less than $5,000 you invested into the market. If you have 5,000 or less, yes, I would put a stop loss. If you have more than that in for long-term investments, I wouldn't. But this is why you want steady, consistent gains opposed to rapid growth of 40%, 50%, and then we tumble down 25% because it shakes your confidence and destroys your confidence and your account at the same time.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.